We will be recording the session so that we can share it with other people as well. Okay, folks, we are ready to start. Before we start, let me just tell you, this class is very unlike your school classes you attend. So this is a class which is interactive. So I'm hoping to see a lot of questions from each one of you. Feel free to interrupt me, ask me questions. And my hope is that your questions will help in better understanding for other people as well. So please feel free to pop up questions whenever you have. Okay, so since there are a lot of kids, let me first ask you a basic questions. Do your parents ask you to study a lot? Can somebody unmute and answer that, please?
Yeah.
Yes, so
Yes, they do. Yes,
Okay.
they do.
Okay. Why do you think they do that? Why do you think your parents say
So
that?
that we can just because we become good in studies, higher grades, and get and pass on with good marks and stuff.
Okay.
So that we can do something good in life.
Okay. And what is that something good in life?
We can become something that gives us money, like getting or a job or earning money from somewhere and having the family in a good way.
Okay. Makes sense. Yeah. So that's what I was pointing to, that most of the parents, we tell our kids how you should study more, how you should earn money, but we never teach our kids. This is something which is not taught to you in school, right? How can you manage your money better, right? Money is one thing which needs to be managed just like anything else in life, right? Your parents, maybe when you were young, they taught you how to brush your teeth or how to wear your clothes or whatever. When you probably grew up, maybe your father taught you or mother taught you how to ride a bicycle, right? But money is an important part of all our lives, right? Each one of us is spending money in some way, either to get some either order food or order, pay tuitions, pay fees for your school, right? A lot of different applications of money, right? But as you grow up, obviously you will need to understand how to manage money. And that is something which is not taught in schools. That is something which a lot of people are not talking to their kids as well. So the entire idea of this class is that we talk to you about how you manage your money. Okay. And please ask a lot of questions. So I don't expect you to be on mute. Like, I know that I have teenage kids myself and I see that in their classes they are on mute. But here I don't expect you to be on mute. Please unmute yourself. Please ask a lot of questions, and that way everybody will learn. Okay, kids, are we ready to jump in?
Yes.
Awesome. So let me first give you a little introduction of mine. Anybody out here whose parents want their kids to want you to go to IITs? Anybody out here?
My parents never they were like, I will be whatever I want. They didn't just
yes, me too.
told me something.
My parents also didn't said that you should become this. They also said that you can be anything. And one of my dreams is to do IIT.
Wow, that's nice.
Same here also. I also want to go in IIT.
That's nice. That's nice.
I have a different
be an
dream.
IIT too.
I have a different dream, but yeah, it's not IIT.
Cool, cool. That's good to hear. So yeah, I studied at IIT long time back, almost yeah. I got inside IIT in 91, graduated in 95, got in with great difficulty, came out with great difficulty as well. But anyway, that's am I audible? Somebody saying
You're audible.
I'm audible? Okay, okay, cool. Then I used to work with Infosys and Amazon. I'm sure both companies you would have probably heard about, Infosys and Amazon. I have done fairly diverse things in my career. I have ran restaurants, made web series, did some stand-up comedy. This is besides the software work I do. And I do a lot of work in the music space, as well as I do some work in the fake news space. So over the years, I have done sort of diverse kind of work. And now I love teaching personal finance to everybody, which includes adults as well as kids. So that's how we are. So enough about me. Now let's jump into the topic. Okay, I'm sure you all of you recognize this, right?
Yeah, money
Yes,
heist.
sir.
Okay, okay. So you obviously know this story, right? So if this is your idea of making money, this is a wrong session, right? Money heist, you have seen how they sort of go to a bank or go to and make money using that, right? So that's not the idea of what we are talking here. But I thought money heist, just 1 minute, I'll just get others in as well. Hello.
Excuse me, sir.
Okay, so first let us start with the basic question. What is money? Right? So let's just understand the basics of money and what existed before money, right? So money is something which is a medium of exchange. What do you use money for? You basically give money to, let's say you have to order food, you pay money for that and you get food ordered, food delivered to your home. Or let's say you want to study in a school, you pay money to the school, and and basically they
House payments.
house payments, right? So finally, what money, the purpose it is solving for you is that it enables you to buy something. So what you're doing is you are paying money to somebody, and then that person is giving you back a service or a product, right? So for example, if you go to a beauty salon, you go to a salon and get a haircut. Okay. So, and you pay, let's say 100 rupees for getting a haircut, right? So that is one scenario where you are getting a haircut done. The other scenario is you go to a grocery shop and you buy some chocolates, right? And you pay money for that, right? So it's primarily a medium of exchange where you can exchange things. And so what existed before money? Let's talk a little bit about that. So in very, very old times, maybe thousands of years ago, the way money thing worked was that people could, exchange goods, right? So
Uh,
let's say,
they give their, like, it also happens in sometimes some cases that they give their animals or someone to someone else and they get money from that.
exactly. So that is where the barter system existed, right? So in barter system, what happens is, Som, you have raised hand. Just say, can you please go ahead and raise your doubt?
Yeah, yeah. I wanted to say something about the barter system.
Yeah, sure.
So, so there are two traders. Let's say there are two farmers,
Right,
and they decided to trade.
right,
So one farmer gives his horse in like exchange of a cat. So
right,
that's not fair because what will you do? Like you'll pet a cat, but horse can come and use like it. You can ride on a horse. You can use it for transportation and all. So that's not a fair trade. That's why the purpose of money came in. And in the earlier times, there was not the currency. There was these like valuable substances like gold, metal, silver that
right,
was used in like
right,
in place of money.
right. Perfect answer. Yeah, yeah. So that's pretty much the purpose uh, which money serves, that it enables you to build a medium of exchange. Okay. And yeah, the problem which you were pointing out was that, let's say somebody has a horse and he is ready to sort of replace it with a cat, but he might not be ready at any point, right? If you exchange it with money, you can do these two transactions at a different time, right? So I can get money for my horse right now, and let's say I need cat 2 years down the line, I can buy a cat 2 years down the line instead of doing it immediately. Aditya, go ahead.
Yeah, I have a question. Like before, like things used to be much cheaper. Why is it more expensive now?
Yeah, so we will talk about that as well. Inflation is something which we will talk about in this session as well. Okay. Just let me go to my last slide. Yeah. So yeah, what I talked about was deferred payments, right? And the other thing is the store of value, right? It stores some value, so you have money, and then you use that value to buy something, right? And look, currency notes, if you talk about currency notes or coins, right? They as such have no value, right? If it's just a piece of paper, right? It does not have any value.
And they had just printed with the value.
Exactly. So there is nothing like that. It has any intrinsic value. It is basically what you can do with it. That is the value of money, right? Okay, so let's understand few more concepts which are related to money. So the first thing is a bank. I'm sure all of you, Ashavri,
Yeah, we know a bank. We can just keep our money safe in banks mostly.
right, right.
So
Ashavri,
there are many purposes of a bank,
right. So
not just storing money.
yeah. So we'll talk about each one of them. Ashavri, you have a question? Please go ahead.
Yes, sir. So I didn't understand what are deferred payments. Can you please repeat?
Yeah, sure. I'll repeat that. So let's take the horse and cat example. There are two people who, one has a horse, one has a cat.
Yeah.
Okay. So one option is that I can immediately exchange, let's say a horse is worth 10 cats. Okay, let's make that assumption.
Okay.
So one option is that I will give you the horse and you will give me 10 cats. That is one option. The second
Okay.
option is, let's say I don't need the 10 cats today. Okay. So in that case, you give me horse, I'll give you money, and you can buy 10 cats maybe 2 years down the line. I don't need cats right now.
Okay.
So you can defer that payment instead of doing it at that point.
Okay.
Right. So money basically basically serves that purpose as well.
Okay.
Got you?
Yeah.
So now let's talk a little bit about bank. I am guessing that your interaction with bank is mostly ATMs, right? Where you go and pull out some money, right? You put in some card, punch in some code, and then you get some money out of the bank, right? And
Yeah.
then you go to a bank, you can deposit money as well, right? You can deposit money, and when money gets deposited, basically bank stores it safely for you. Yeah, go ahead, please. Yeah, Shavri, go ahead, please.
Oh, I didn't unraise my hand.
Okay. I saw your raised hand, so that's why. Okay, no worries. Okay, so what the bank does is that it basically you go and deposit money. And why will you go and deposit money? Because bank gives you some interest, right? So a typical bank nowadays will give you around 2.5 or 3% interest. Yeah, Shavri, go ahead.
What does interest mean?
Okay.
Yeah.
So let me explain you the interest. How does interest work out? So let's say you deposit 100 rupees in a bank, right? Now bank has your 100 rupees. What it will do is, instead of giving you, let's say bank offers you 3% interest. So after 1 year, it will give you 103 rupees. Your rupees will become 103 instead of 100, because now it has added that 3% interest on your bank deposit.
Okay.
Okay. So interest is nothing, but this is the extra amount because bank is keeping your money with itself, right? And what bank does with the money now, look, bank collects money from lots of people, right? Let's say there are lakhs of people who deposit thousands of rupees in a bank. Now bank will end up with, let's say, crores of rupees. Now what will bank do with this money, right? So what bank will do is, bank basically lends money to different businesses. Okay, let's say there is another person who wants to start a restaurant. Okay, now let's say if you want to start a restaurant, you will need money to start it, right? You will need some property where you set up a restaurant. You'll have to buy some kitchen equipment. So what happens is, if you, what will happen in this case is that if you go to the bank and say, tell the bank that I want to start a business, give me 1 crore of rupees. Now what the bank will say is that, yeah, I'll give you 1 crore of rupees, but I will charge you, let's say, 10% interest. Okay, so the primary way bank works is that you deposit your money, bank gives you interest, and then bank loans that money to other businesses at a higher interest rate. That is the only way they will make money. Yeah, go ahead, Ashavi.
So if a bank, suppose if the person if a person, like you said in the example, if that person wants to open the restaurant and he wants 1 crore, so the bank asks for 10% interest. So then what will the man repay?
Yeah, so let's say if I'm
1 crore 10 lakhs.
yeah, so 1 crore will
Okay.
become 10 lakh. He will pay 10 lakh on and the assumption is that a businessman, let's say if you are opening a restaurant, so the assumption here is that, let's say I take 1 lakh, 1 crore loan, 10 lakh I have to pay back to the bank. But the assumption is in restaurant business, I'll probably make 30 lakhs.
Okay.
Okay. So the remaining 20 lakh is something I can keep in my pocket, distribute it to my employees, or distribute it to my family, or just put it in another bank, right? So businesses will work on some margin, right? Let's say you eat a idli in a restaurant, right? You pay 20 rupees for the idli.
Mm.
But the cost of making that idli is not 20 rupees, right? That is probably 5 rupees, right?
Yes.
So yeah, I think multiple people have raised hands. Can you go ahead, please?
So like if the businessman he opens a restaurant, so the money he like lended from the bank, he'll invest it in the business. Like he doesn't have a like it's not like he's just borrowing money for the sake of it. He'll invest it and then he'll like get profit from it.
Yeah, that's right. So otherwise he will be paying interest for no reason, right? So loans are given for a particular purpose, like you have home loans, for example, right? So somebody else might take a home loan to buy a house, and again, he has to pay that interest to the bank, right?
Sir, I am Jahanvi.
Yeah, Janvi.
Sir, I did not understand the meaning of assumption.
Meaning of what? I'm sorry, Janvi, I didn't get you.
Assumption, the word you used before, like just in the sentence.
Okay. No, what I'm trying to say is, bank is basically something who sits in the middle, who takes money from a large number of people and then passes that money to different businesses who are trying to take loans for doing their business.
Okay.
Right? So bank is nothing but just a company or a organization which sits in the middle, right? So is the concept of bank clear to everybody? Any other questions about the bank?
No.
And is it also clear to you how a bank makes money? So the primary mode of bank making money is, it is giving you, let's say, 3% returns on your deposit, and it is giving loans at 10%. So 10 minus 3, 7% is the amount of money they will make, right? So is that concept clear to everybody?
Yes.
Yes, sir.
Okay, let's go to the next concept now. Okay, so have you heard of what is RBI, Reserve Bank of India? Have you heard?
Yes.
Okay, If
I
you
have heard of it, but I really don't understand how does it.
okay, sure. We are here to talk about
Sir,
exactly.
can I tell about it?
Yeah, sure. Go ahead.
So it's an authorized bank of like government of India. It
Right.
it's a like central bank, and every bank like HDFC, ICICI, it has to like get an approval from RBI to run its business.
Right. Exactly. I
And
think.
RBI like on the currency of India, rupees, on every note it has a stamp of the governor which is issued by RBI.
Perfect answer. Yeah. So that's exactly. So every country has a central bank. In US, you call it Fed, and in India, you call it Reserve Bank of India. And first purpose of the bank is to issue currency, as you noted down, right? So, like for example, here in Mysore, they have a printing place. I don't know how many of you know that actually a lot of Indian currency gets printed in Mysore. Okay. So they have basically their job is to make sure that currency notes are correctly printed and they have enough security features. Then they manage countries' financial policies. Then they supervise. So they make rules for all the banks, right? So they make rules and manage all the banks because banking is a very critical industry to our economy. Okay. Because banks are the guys who operate money for you, right? For businesses as well as individuals. So banks have to be a very safe and secure place, right? So there are a lot of rules which are set by RBI for all these banks. Uh, and then they create, I'm sure you must have used Paytm or any other system, right? To try UPI to transfer money from one person. So let's say you go to a shop and you scan a QR code and make a payment to a shopkeeper. So finally, what happens is some money from your account goes to the bank account of the of that person, right? Whoever the shop owner is, right?
Yes.
Right. So how does that happen? That primarily happens that there is a system called UPI, or earlier there was a common system which is still there, is called NEFT, National I think Fund Transfer Scheme is there, right? So these are different ways in which money gets transferred. So all these systems are managed by Reserve Bank of India. Okay, so this is very different from the other type of banks. This is not like a bank which where you can go and open an account and get an ATM card. Okay, this is a bank which is for a different purpose. Yeah, Shabri, go ahead, please.
I still don't understand that. How does the money travel from one account to another account?
Right. So look, money, what you see as currency notes is physical money. So when you give physical money, it is very obvious that there is a physical thing exchange, right? It's like I give you a piece of cake. It's very clear that I have given the cake to you, right? But
Yes.
digitally, what happens is there has to be a central agency which deducts money from your digital account and deposits in the other side, right? This is like a software sitting in the back end, okay, which will basically reduce money from your account and will add that amount. So let's say you transfer 10 rupees to my bank account, right?
Okay.
So these are the type of systems which are managed by Reserve Bank of India.
Okay, so that security will will make sure that there are 10 rupees
Right.
reduced from my bank account and 10 rupees increased in your bank account.
Yeah, so that is something which is responsibility of Reserve Bank of India,
Okay.
that 10 rupees doesn't become 12 or
Okay.
somebody else in the middle is not able to take away that money.
Okay.
And so we as citizens of India, like we have trusted the bank that it will keep in record of the transactions and it will not deduct the amount more than the more than the bill, and it will not transfer the account more than the bill. So we as citizens are trusting the banks,
Right,
and the shopkeeper is also trusted the bank.
right,
That's why this transaction is possible.
right. And there are few more things which happen. So let's say there are two banks. Let's say there is a let's take example. Let's say there's a ICICI Bank and a HDFC Bank. Okay. Now there are people in ICICI Bank who are transferring money to HDFC Bank. And the reverse is also happening, that somebody from HDFC Bank is transferring the money to ICICI Bank. So what banks can do is, what a central agency can do it can add them all up. Okay. And then figure out that actual transfer might be much less compared to doing each transaction, right? So these kind of backend systems are managed by Reserve Bank of India. Okay. So Reserve Bank of India is a very, very important part of our banking system. It is very important. The governor of RBI is a very important person in the country's economy. So, so Reserve banks always play, I don't know if some of you are following, but maybe you should read up about it. You might have seen there are economic problems happening in Turkey. There are economic problems happening in Sri Lanka. There are economic problems happening in Pakistan. And it's a good case study to study more about that, why those financial problems are happening. Okay, and that is because some of these central banks have not played their role effectively in these countries. That's one part of the problem. Okay, so I think Reserve Bank of India, things are clear?
Yes.
Yeah.
Okay. Okay, so let's have a little bit of song. I don't know how many of you would have heard this.
तो खूब ही कमात हैं महंगाई डायन खाया जात है
Have some of you heard this song before?
No.
Saying no, but it's funny. It sounds funny.
Yeah, so what this song is saying is, I'll translate in English for everybody. So he's saying that my husband or whatever, my spouse, my husband or wife earns a lot, but महंगाई is inflation, right? Inflation basically keeps eating it up, right? So let's talk a little bit about what is inflation. Okay, so what happens with money is, I remember I came to Bangalore in 1995. Yeah, I graduated in 95. And from what I remember, going to Majestic from my home, I used to stay in JP Nagar. It used to cost me around, I think, 30 rupees, 35 rupees, roughly in that range. Right now, I think in 30, 35 rupees, I probably can go maybe 1 kilometer or 2 kilometers away, right? So what happens with money is that the value of money is something which is not static, right? Money keeps losing its value. Money is, so there is something called as inflation in every economy. Okay, so a good example of this, let's say gold prices. Okay, so gold is normally sold as, 10 gram, right? So what is called as tola in Hindi, right? So the price was 4,400 in 2000. And now the same thing is around 50,000, right? Yeah, go ahead. Please ask your question.
Sir, I need to add something.
Yeah, sure.
So, when our country was independent in 1947, so the rate of dollar and rupees were almost same, and
Right.
now the rupee value has degraded and the dollar value has inflated so much that the difference is very high now. At that time, it was like $1 was equivalent to 1 rupee, but
Right.
now it has inflated so much that the difference is around 70 rupees.
Right. Yeah. Yeah, you're right. That is a ratio which has changed over time. But inflation is primarily the concept that prices of things keep changing, right? So things which were costing 10 years back, the cost was, let's say 100 rupees, that probably has become 110 or 120 right now. And right now in India, inflation is around 5-6%. That is roughly the inflation. When I say 5-6%, what it means is that what costed you 100 rupees today, 1 year down the line, it will cost you around 105 rupees. And then again, a year after that, you apply 5% on that again. So one of the things you should understand is that if you, let's say, earn 100 rupees and you don't do anything with it, let's say you just keep that 100 rupees safely in your piggy bank or some other place, what will happen with you is that you will become poorer day by day, because the value of that money is not there, right? So you could buy a burger maybe now for 100 rupees, but you probably can't afford to buy a burger with that 100 rupees 10 years down the line. So you don't have an option but to figure out how you can grow your money. If you don't grow your money, if you just keep it safely somewhere, you will keep becoming poorer and poorer day by day.
Because we also need to use the money for our daily requirements and needs.
Right. And that is why it is very important that you figure out a way in which your money can grow. And we will talk a lot about this, how to make your money grow. We will talk a lot about that. Look, your parents are giving you education which will enable you to make money. Okay, this education will enable you to grow your money.
Yeah.
So is the concept of inflation clear to everybody? And do you
Yes.
clearly get it that this is not an option? Otherwise, you will keep becoming poorer day by day, right? So you have to grow your money.
Yeah.
Okay, now let me talk about a little bit slightly more complicated topic. Okay. I am sure a lot of you are probably studying maths and those kind of things, right? So let us talk about a concept of something called as XIRR. Okay. And let me explain with an example. So let's say what I do with you is that let's just put these dates here, right? We have dates here. And let me just draw it here for you. Let's say you have dates here, right? 1st Jan 2000, right? All these dates you can see, right? Now, let's say what I do is that on 1st Jan 2008, I tell you that give me 100 rupees. Okay. 1st Jan 2009, again 100. So I do this for 10 years. Okay. So I did it for 10 years. So I have taken 100 rupees each year from you. So I've taken altogether 100 into 10,000 rupees for you, right? And then I tell you on 1st Jan 2018, after doing it for 10 years, that in the next year, I'll give you 1,500 rupees back. Do you think it's a good deal? Because you have given 1,000 rupees, I'm giving you 1,500 rupees. Do you think it sounds like a good deal?
It is okay, but not that much good because you're just adding 500 more to it, and that's not such a big one.
That's not a fair deal.
That's not a fair deal, right? So what happens with lot of financial products or things like this is they are exactly like that, that you pay for them across a large duration. Okay. And then they will give you a return, right? So what happens is that there is a way for you to calculate this correctly. So absolute returns, if I talk about, you have earned 500 rupees on an investment of 1,000 rupees, right? So your absolute returns are 50%, right? 5,500 by 1,000 into 100, that is 50%, right? But what has happened in your money is that your money has spent different amount of time in the system, right? So if let's say if I look at this money, right? 1st Jan 2008, right? So this money has spent, this money has spent almost 2008, 2010 years there, right? This money has spent around 9 years. This money has spent 8 years, right? So amount of time spent by each of this money is different. So the way you calculate what are your returns is using something called as XIRR. And I'll show you an Excel sheet how this is done. Okay, so let's just move to an Excel sheet and let's just see how. Yeah, please go ahead, Asabi.
I need to understand what are absolute returns.
Yeah, so let me just go to Excel and explain it to you. Okay.
That feels something totally new.
Yeah, this is a new concept, but it's a very important concept for, look, what you are taught in school is usually, I think it's primarily,
How to make money? Like how will you
yeah, but I
improve
think
it to
simple
better?
interest and compound interest are taught to, I think, in most of the school, right?
Yes.
Right?
I
But,
haven't
Yes,
learned about both of them.
okay. So simple interest, let me just explain it for the simple. So let's say you are 100 rupees, okay, and you get an interest of, let's say, 5%, right? So what will, it is written as 0.05. What will become your money will be this 100, right? Plus, so this, the interest on this amount is basically, let me just put it here, 100 0.05, right? So this is 5 rupees. So now my amount after 1 year will become 100 plus
105.
5 rupees, right? 105, right? So this is the way it works, right? Simple interest calculation, right? So, yeah, do. Any question on this? This is clear, right?
Yes, sir.
And let's say if we have compound interest, okay. So in that case, what happens is the formula for compound interest, I'm sure some of you might have been taught in the college, is 1 plus this interest, okay. And then you make it power of the duration, right? If you do it for 3 years. So let me just explain it here. Sorry guys, click the wrong thing. Okay.
1 plus r upon 100 by n.
Yeah. So for example, it will become something like this, right? If you start with 100 rupees, after 10%, you basically becomes 110. Now your next interest calculation starts on this added number, right? On 110. And then you get again 10%. This time the interest you are getting is 11 rupees. Okay. So this is basically how compound interest works, right? 100 becomes 110, then 110 becomes 121. Now again 121 you start with in the next year and apply 10%. Now the 10% is 12.1 rupees, right? So this is how the compound interest calculation works here.
How does it become 12 and 11?
Yeah. So what happens is that here, so this is after first year. Let's say you start with 100 rupees, right? And you are getting 10% interest. So your interest is 10 rupees, right? Now your amount has become 100 plus 10. So that has become 110, right? Now in the second year, what is happening is you are starting with, your starting money is 110 rupees.
Yes.
Now, what is 10% of 110? 11 rupees, right? Right? 10% of 110 is 11 rupees.
Okay.
Right? So now you are adding 110 plus 11, it becomes 121. Now in the third year, you have 121 rupees to start with. And now 121 rupee, 10% is 12.1.
Okay.
Okay. So here I think I have removed the decimal places. That's why you are probably not, yeah. Right now you can see the decimal places here. Okay. So this is the way compound interest works. Right? But you are getting, in a way, you are getting interest on the interest. Okay. So coming back to this XIRR calculations, again explaining this. So now simple interest, compound interest are clear to you. Now let's talk a little bit about this XIRR, and I'll assure you after this, there won't be any maths. Okay. So here what happens is, here you have given totally 10 times you have given 100 rupees. So now you have given overall 10 into 100 equal to 1000 rupees. And let's say I'm giving you back 1500 rupees. So my calculation of percentages, I'm getting 500 rupees by 1000, right? 500 by 1000. So So that makes it 50%, right? 500 by 1000 is 50%, right? If I make it percent, this becomes 50%. So that is how I get my absolute returns, right? But as you understand in this type of setup, each amount of money is spending different amount of time. So there's a formula in Excel which is called as XIRR formula, using which you can calculate, you can just put in these dates and you can put in these amounts and you can calculate what is your actual return on this. Okay, so in this case, for example, it is 7.25%, not 50%. So in some way, it is averaging out the fact that you are putting in this money at different times. So is this concept clear?
Sir, could you repeat what the full form of
Yeah, so XIRR is also called internal rate of return. XIRR is just the formula name here in Excel. So it is basically annualized internal rate of return. That is the concept of it. And in any so let's say you buy a LIC policy, right? So in LIC policy, you pay premiums for 10 years, right? And then let's say that gives you a return, right? So if you want to calculate that these returns are good or not, you have to make this calculation of XIRR using Excel. If you don't do that, somebody can confuse you with this 50%, and then you might get confused whether this is good or not. Right? So this is a way of calculating the real returns of any financial instrument. Any questions on this? I know this one is a little tricky one to understand, but try it out and just make a simple Google Excel or something and try this out. It will become very clear to you.
Okay.
Okay, sir.
Okay, so now let's take an example of how does a business work, right? And I'm taking a typical Bangalore. I think every restaurant, half the restaurants are called Sukh Sagar. So let's start with, let's say there's Mr. Pai who wants to start a restaurant called Sukh Sagar. Okay, so to start a restaurant, what all does he need? Okay, first he needs kitchen equipment, right? Kitchen setup, right? You will need a kitchen setup. Then he will need a property, and property in Bangalore, you know, right? They ask for at least 10 months advance. So that is something he will need. What else do you think he will need to start a restaurant?
Employees. Sir, employees.
Employees, yeah. So, and employees of different types, right? He'll need somebody to cook. He will need waiters, probably need accountant, and then he might need some managers also, right? Who are there to manage things, right? Even waiters, I don't know if you have seen in restaurant. Receptionist, right? So in restaurants, you have guys who come and take the order. Then there's another guy, they are called as captains in restaurants. Okay. Then there's another guy who comes and, actually serves the food to you, right? So these are all the expenses here they have to incur, right? And so there are some expenses which are initial expenses, right? So kitchen equipment, you don't buy every day, right? You will buy it once. But then let's say if it's a Sukh Sagar, they will serve maybe idli and dosa, right? So they will need rice, they will need some dal, they will need oil, they will need some aloo, potatoes, right? So they will need all these things which are operational things for them. So there are always expenses which are initial expenses, and then there are operational expenses, right? And what business is doing for you is that it is basically bringing all these ingredients together and then giving you something which you value more, right? So let's take a simple example. Let's say you are eating a idli, right? Idli typically consists of some rice, some dal, and then it is steamed, right? So you pay, let's say 15-20 rupees for idli in Bangalore, right? So typically it doesn't mean that 15-20 rupees of worth of rice or dal goes into that. Probably the ingredient cost for that is maybe 1 rupee or 2 rupees, right? But then there is somebody who's cooking it for you. It is his time. He's getting his salary, right? Then there is a place where you go and eat. You don't have to wash those utensils. Somebody else will have to wash the utensils, right? When you go to a Sukh Sagar. So any business you look at, the primary way it is working is it basically has some sort of ingredients. It is combining those ingredients to create a product which has value for you, and it is charging you for that value by increasing the price in that way. So as you understand from this, that each business has an initial cost and then an operational cost, right? Is this concept clear, guys?
Yes.
Right? And this,
Yeah.
any business you come across exactly does this, right? Ingredients might be different. I'm giving restaurant as an example because that's easy for all of us to relate to. But let's say there is a barber shop close to your home. His ingredients are, his ingredients are probably the shampoo he has, probably the creams he has, right? And then the people who are actually doing it, right? So ingredients might become different based on the business which is there. But primary thing every business does is that they have some ingredients which they are combining to create value. And each business needs some money to start it, right? So let's say if you are already very rich and already have 20 lakh rupees, maybe you can start restaurant just with that. But otherwise you will have to get that money from somebody else, right? And who can be that somebody else? We will talk about it.
Sir, someone is unmuted. I can just not understand you sometimes.
Oh yeah. I just I think somebody probably unmuted by. I've just muted. I think now I think I should be audible. Am I audible now?
Yeah,
Yes,
you're
sir.
clearly audible.
Okay. So every business operates exactly in the same mode. Okay. So now let's talk a little bit about what is a share, what is a stock, and pizza. I'm sure all of you know about what a pizza is. So
Yes.
let's say I am starting Sukh Sagar, right? Now I want let's say 10 lakh rupees to start Sukh Sagar. Okay. Now the problem is I don't have the 10 lakh rupees. What I do now is that I break up my 10 lakh rupee requirement into 1 rupee requirement and tell a lot of people you buy a stock, a part of my company. Okay. And let's say I sell each one of them in 1 rupees. So I will have 1 rupee stock, 10 lakh of them, and then you can buy any number of stocks. Okay. So stocks are nothing but basically a small part, a very small part of a company, right? So you can become owner of Sukh Sagar by buying that stock, and you are a part owner. You don't have to run the company. You don't have to go and sit there and cook something or do anything else, but you can become owner of the company just sitting at your home. Is this concept clear, kids?
Yes, sir.
Yes.
Right?
So,
So it's just like a pizza. Pizza can have, here we have whatever 8 slices, but let's say pizza has, imagine a pizza having a million slices, and you can buy 2 slices, you can buy 3 slices and just keep them with you, right? So stock is nothing but you become owner of a company. Now the question is, how do you make money out of stocks? So there are primarily 2 ways. Okay. So let's first understand the first way. So let's say now Sukh Sagar is done. Sukh Sagar is working fine. And Sukh Sagar starts earning money. Okay. Sukh Sagar has a lot of customers. Their idli is very good. They start earning a lot of money. And now what they do is that they will distribute some part of that money to the owners, right? Which is stockholders. So they just decide that I made, let's say they made 20 lakh rupees, and they decided that I will give 2 rupees to every stock owner. So let's say if you own 5 stocks, you will get 10 rupees. If you own 10 stocks, you will get 20 rupees, right? So that is one way in which you can make money. Now there is another way in which you can make money. So let's say you own a Suksagar stock, and a lot of people believe that Suksagar idlis are the best, and Suksagar will actually become a very big restaurant. Now I come to you and say, can you sell your stock to me? Okay. So let's say you had bought this one stock, which was worth, when you bought it for 1 rupee. I come to you and say that, I am ready to pay 1.5 rupees for this. Give this stock to me. Okay. Because my belief is that this stock might be worth, let's say, 3 rupees in future. Right. And let's say you need money at that point. So what you'll do is you'll sell it to me for 1.5 rupees. Now the stock is transferred from you to me. Right. So now I become the stock owner and your stocks are now with me. And now whatever a company shares in future profit or company value goes up, that advantage of that will come to me, not to you. So is this concept clear, kids?
I have one question.
Yeah, sure.
So in the first one, it's written company might share profits with you. So
Yeah.
is it that it may or it will?
No, it is not necessary. So look, as I'm telling you here, there are two ways in which you can make money out of it. So what some companies do is that they give back the money to the investors. What some other companies do is that they will invest the same money. So let's say I'm a restaurant owner. Let's say I own Suksagar. So I make, let's say, 20 lakh rupees. One option I have is I give back to the shareholders. Another option is that I will say I will open another branch in Jayanagar. Okay. Now what will happen is if I open another branch in Jayanagar, my business will become bigger. Right? Now what will happen is if my business becomes bigger, the value of your stock from 1 rupee might become 5 rupees. Right? So companies can decide to do either.
Okay.
They might give you money back, which is called as a dividend, or they might invest in the business and try to grow the value of the stock.
Okay. And the stock, so if you want the stock, so like you said, stock is nothing but a very small part of a company. So if we want a stock from a company, we'll have to pay for that.
Yeah, you will have to pay for that. Yeah, that's right.
Okay.
So we buy we buy this stock at a price. And then let's say if the price goes up and then you sell it. So let's say you bought it for 100 rupees and then the price goes up to 130 rupees. Then you make 30 rupees out of that stock, right?
So if I have a stock that is for 100 rupees and then in future it becomes 130, and if someone comes to buy it, I'll sell it to that person for 130 rupees.
Yeah, that's right. Yeah.
Okay.
That's the way to go. Yeah, Shaurya, go ahead.
And sir, then what is NFT?
So NFT is totally a different thing. I think that will be slightly beyond the context of this course, but I can discuss that with you separately.
Yes, sir.
Okay. Please ping me separately. We can have a separate discussion about that. But my suggestion will be to stay away from Bitcoins or NFT type of things.
Yes, sir.
Okay. Okay, so I think stock concept is very clear. I'm sure all of us want a part in the pizza. Okay, now let's talk a little bit about what is the stock market. Where do you buy a stock from, right? So you might have heard of stock market, right? So what is the stock market? It is just like any other market, right? What do you do in market? In market, somebody
and sell.
buy and sell, right? So somebody is buying, somebody is selling. So stock market is nothing but, or stock exchange is nothing but a place where people are buying and selling. So Suksagar stock is somebody is selling it because he needs the money. Somebody else is buying because he believes that the stock price of this Suksagar is going to become a big brand. It will become like McDonald's or some other Burger King tomorrow. So that's why somebody is ready to buy. Yeah, Ruchi, go ahead with your question, please.
So sir, when a person sells their stock, they're buying someone. So when someone is buying the stock, someone else is selling it for the same price.
Right.
Okay.
Yeah, so they have to agree on a price, right? So that is what the stock market or stock exchange do,
And
right?
I add one thing, Janvi.
Yeah, sure, go ahead.
So mostly like if someone buys something from a shop and wants to make his own shop of the same thing, then he can also he mostly for earning some profit, he'll add more money to it, and for the buyer he'll say the double or like 10 more percent of it.
Right. Yeah, so that happens when you go to a shop. Here, what happens is that in exchange, when you place an order, so let's say you go to a stock exchange like Bombay Stock Exchange, and you put an order which says that, let's say you bought that stock for 100. You basically say that I'm ready to sell the stock for 120 rupees. Now there is somebody else who's a buyer of that stock. If that guy also says that I am ready to buy it at 120 rupees, a stock exchange just connects both of you. Okay, so here it's not like a bargaining which you do. The only thing is that when you place the order, you can tell at what price you want to buy, and a seller can say at what price I want to sell. So a stock exchange is more like a matchmaking system. Okay, it just connects both the guys, and both of you might not even know each other. There's a stock
Yes, sir.
exchange, right? Any other question on this?
No, sir.
Okay, so you might have heard of stock exchanges. There's a Bombay Stock Exchange, there's a National Stock Exchange. Those are things which basically where tons of this share buy and sell happens, and this amount in which it's selling and buying happens goes in, I would say, billions and trillions. Okay, so the amounts are pretty huge. So this is how yeah, go ahead please.
So there was a Wall Street exchange crash somewhere in the 1900s. So I mean, at that time they didn't have this kind of technology. So how did stock market work then?
Actually, you should watch this series on Sony Live. What's that called? Based on Harshad Mehta's scam. So people will.
Yes, sir. I think I watched it.
Yeah, I think some of you probably watched it. So in that, you remember seeing that there are people in a building who are.
You have to call your broker.
Yeah, you
and
have
they'll
to.
place the order for you.
Yeah. So it used to physically happen actually. Scam 1990. Yeah, somebody I think mentioned. Yeah. So in that, a lot of these things used to happen physically earlier, where somebody will make a note of at what price people are ready to buy, at what price people are ready to sell. You have to go via broker. But all those frictions are gone now. Right now, you can download an app, install this, do buy selling from your home very easily. So all these things have become very easy, very, very frictionless, especially in last 4-5 years. Right?
Yeah.
What does shares mean?
Yeah, so shares just means that you're part owner of the company. That's
Okay,
it.
like stock.
Yeah, share stock is same. Yeah, it's the
Oh,
same.
okay.
Yeah. Okay, so initially shares are issued by the company, right? So, and what happens is what is called as initial public offering, right? You might have, like for example, Zomato did a IPO recently, right? So initially shares are issued by the company, but later on they are traded between people on an exchange. Okay, after that company is out of the equation. Okay, so let's say Zomato raised did an IPO where they launched their shares. Okay, but now what will happen is that now Zomato is not related to that. Now people are exchanging with each other based on what they think this company will do in future. Yeah, go ahead, Asha.
I don't know that. I don't know what an IPO is and what is the secondary market or exchange. Can you explain that?
Yeah, sure. So IPO is when, so like for example, I gave example of Sukh Sagar. Let's say you are starting a new company, right? And you need money. Or let's say you are already running a company, but you need money for expanding or something like that, right?
Okay.
So then what you do is you go to the public, the company goes to the public. So let's say Sukhsagar wants to open 10 more branches in Bangalore. Okay, now it needs 10 branches, each branch is 10 lakhs, so it needs 1 crore rupees. So now what it does is it goes to the public and says, buy my share. So using that, I'll get money and I'll invest that in opening my 10 new branches, right? So that is IPO by the Sukhsagar.
Okay.
Right? Now secondary market is, now those shares are already there. Now you are, let's say you bought Sukhsagar share. You are trying to sell that share, let's say, to me. Okay.
Okay.
That is, now company is not involved in that at all. Right? Me and you can exchange those shares without the company being in it. So that is the secondary market or an exchange. Stock exchange, stock market, right? That is what.
Okay.
Okay, so this is another term which I'm guessing some of you probably would have heard. Nifty 50. How many of you have heard of this?
I heard of it.
I haven't.
Okay.
So is it an
I have,
index
sir.
fund? An index?
This is an index, yeah. So what happens is that, so like I gave you example of a Sukhsagar, right? So similarly, there are tons of companies, right, which are there in the stock market, right? It's almost around, I think, 5,000, 6,000 companies in Indian market, right? Now, what happens is that they take the 50 biggest companies. The biggest company in India are, for example, Reliance, Infosys, ICICI Bank, right? These are the type of companies which are the biggest companies in India. And then what they do is that based on the price of them, they create a number. They create a mathematical number, which basically tells you how the market is doing. So let's say if somebody asks you, how is, how is the market doing? So it's like something like, let's say you have exams, right? So exams basically benchmark you that how you are doing in your studies. Okay. So similarly, you have things like Nifty 50, which consists of 50 largest companies in India. And based on the prices of their stock, Nifty 50 will go up or down. Okay. So Nifty 50 is just an index. And the popular indexes in India are Nifty 50 and Sensex Sensex has 30 stocks. Nifty 50 has 50 stocks.
What do you mean by Nifty 50 has 50 stocks?
Yeah, so let me just explain you with a example of, just give me a sec. Yeah, so let me just tell you which companies are there in Nifty 50. Okay, so let's see which companies are part of Nifty 50. Okay, so what the stock market does is, yeah, so these are the companies. Bajaj Auto, Hindustan Liver makes most of the soaps, shampoos which you use. Maruti, I'm guessing you are, you know, the car company. Hero Motors makes two-wheelers, HDFC Bank. So what they are doing is that they are taking, these are the 50 largest companies in India. Okay, and as you can see, these are from various different types of companies, right? Wipro is a software company. HDFC is a bank. Tata Motors is an automobile company, right? So Nifty 50 is nothing but an index. It's a mathematical function created out of price of this. So let me just show you how Nifty 50 value is. Okay. So, okay. So here you can see Nifty 50 is basically right now at 17,617. This is it's a number. Okay. And this number represents how our stock market is doing based on these 50 companies. Okay. So the value of this Nifty 50 was, so if you go to, let's say, around 2000, this is 99. Yeah. Nifty 50 was at around 970. Now it has become around 17,000. It's almost grown around 18 times. So what this means is, in a way, look, as we talked about one share price, right? Similarly, it is basically combined these 50 companies, share price has gone around 18 times in last 18, 19 years. Right? That is what it is conveying to us.
Yeah, okay.
Okay, so what it really means is that every every big company, so the stock price of that company is 17,617.
No, this does not mean that. What it means is that on an average, so if you create a mathematical function of these top 50 companies and take their prices and you apply a mathematical formula there, then you will reach at this number. And if the price of those company increases, stock price, this number 17,600 will become 18,000, it will become 19,000 if the prices of those companies increase.
So it's the price of all the companies in total.
Yeah, all the companies combined in a particular proportion.
Okay.
Okay. So it's not like you can't mathematically just add it and get this number. But let's say if you add them in a particular proportion, you will get this number.
Okay.
Okay. So is the concept of Nifty 50 or index clear to everybody?
Yes, it is clear.
Okay.
Yes.
So Nifty 50 is a great way for you to understand how our stock market is doing, right? Otherwise, there are 5,000 companies. Some company might do good, Sukhsagar might do good, McDonald's might not do good, right? So it's very tough to analyze, but Nifty 50 type of indexes provide you an easy way for you to understand how the market is. Okay, now let's talk a little bit about what is called as fixed deposit or bonds. Any one of you understand what a fixed deposit is?
Not me.
Okay.
Is it
Neither
a
me.
loan?
Yeah, exactly. So it's a loan. Yeah. So let's say banks, you can go to a bank and you basically tell the bank that take some money from me. Okay. So you can always go and tell the bank that I have 10,000 rupees extra, take 10,000 rupees from me and give me 6% interest rate, which means that 10,000, 6% will become 6,000, right? No, not 6,000, 600 rupees, right? So give me 10,000 plus 600 rupees after 1 year, right? So that is the basic concept of a bond. In this case, what happens is that you define when you are taking a loan, it's like you give a loan to a friend, right? You give 100 rupees and say, if you give me after 1 year, give me 110 rupees back, right? So it's exactly like that. So you can go to a bank and take this fixed deposit, or it works for business also, right? So for example, the Sukhsagar guy, instead of issuing stocks, actually could have done this as well. So what he does is he needs 10 lakh rupees to initially start restaurant. What he'll do is that I am taking fixed deposits for 100 rupees each, and I will give you 5% returns. I'll give you 105 rupees after 1 year. So if you want to buy this 100 rupee bonds or fixed deposit, buy it from me. And then he doesn't need to, he won't lose the ownership of the company, right? As we talked about, stock is ownership. Bonds are not related to ownership, but they have to guarantee the percentage. In stocks, what happens is percentage is not guaranteed to you, right? And the money gets locked in here. So let's say if it is a 1 year bond or 1 year fixed deposit, you are going to get that money back only after 1 year, right? So is this yeah, go ahead.
It's not that you can, so suppose you've said that you'll get it in 1 year. So it's not that you'll get it in half a year.
Yeah. So 1 year it's a locked. Yeah, your money is locked.
Okay.
After 1 year, that is how bonds work. Okay. Or some of them might provide you an option that if you break it in half year, you will get less interest. Some of them might provide that option. But yeah, more or less the option is that you lock your money for a particular. So these kind of bonds are issued by everybody. It's not just businesses. It is issued by governments also. Your government takes loans, right? So let's say Karnataka government wants to make a flyover, right? Now it needs money for that flyover, right? It has to pay somebody to make that flyover, right? And government money, what they collect from tax might not be sufficient.
Mm.
So they can also issue bonds that, yeah, these are flyover bonds. This will make a new flyover from, let's say, Majestic to airport. Okay.
So
So
I didn't understand one thing in fixed deposits that, so this example, if the government wants to build a highway
yeah,
and it wants loan, so will it ask the bank for it or the citizens of India?
it can do both actually. It can take the loan from a bank or it can ask citizens of India as well.
So if it asks citizens of India,
Yeah.
so how will they give the interest to each person?
Yeah, so there are a lot of government schemes. They will deposit it into your account. So when you take the bond, they will take your bank details and they will deposit the interest in your bank directly.
Okay.
Right. So fixed deposit or bonds are used by businesses as well as governments, as well as you can take it from a bank as well. Right. So this is a generic concept. Your money logged in and returns are defined that you get these fixed returns. So in this, what happens is that returns are defined. They cannot be very high. They cannot be very low. So if you bought something bond, which gives you, let's say 10% returns, you will get 10%. 10% is not going to become 30%. 10% is not going to become 2%. Right. You are more or less sure.
So guaranteed returns.
It's a guaranteed return. No ups, no downs.
So then why invest in stocks? You can just invest in bonds.
Yeah, because these guaranteed returns are mostly not enough for you to beat inflation.
Oh, okay.
Okay, in most of the cases, the rates at which you get these bonds. So earlier fixed deposit rates in India used to be as high as 13-14%. But even in those times, inflation in India was around that time. Okay, now if you go to a bank and ask for fixed deposit, they'll probably give you 5%. But now Indian inflation is also at roughly 5%.
Yes.
Right?
So we just invest to combat inflation so we don't lose our money.
Exactly. Don't lose your money and you grow your money. Not losing
Yeah.
is obviously the first step towards growing.
Yes.
Okay. So now let's talk about, I think FD bonds are clear to you. Now let's talk a little bit about mutual funds. And this is the most important part because this is something which you guys can start on right away. Okay. So now let's talk about that. Let's say there are a lot of stocks in the stock market, right? So you have a Sagar, you have a McDonald's, you have a Domino's, you have different types of food stocks. Let's stick to food. Now, what happens is the dynamics of every restaurant is very different, right? Selling a idli dosa is very different from selling a pizza, right? The cost of ingredients, cost of labor, who buys it. So you are mostly ready to buy a idli at 15-20 rupees in Bangalore, but a pizza will probably cost you 200-300 rupees, right? So but maybe idli eating people are more than pizza eating people. So each business has a very different dynamics. So as we were talking about that stocks, you benefit only when the company does well. Now you have to understand, is this company doing well or not, right? So understanding that is a very complicated task. It's something which requires full-time people who will read up about the company, who will understand finances of the company, who will understand business structure of the company, and then basically decide whether we should buy stocks of this company or not, right? So what they have done is that they have created something called as a mutual fund. What mutual fund does is, so as it is explained here, let me just show it on the screen as well. Okay. So here what happens is that a lot of investors sort of pool in their money. Let's say there are 1,000 people, each one of them pools in 1 lakh rupees each. Now you have a big corpus of money. Okay. Now what you do is that you hire, you give this money to a mutual fund company. And then what that company does is that company hires 2 people whose only job in life is to analyze these companies. Okay. And decide which restaurant should I, which company should I invest in. So is Sukhsagar a better company, or is McDonald's a better company, or is Domino's a better company? So they will go through all these companies, try to understand their profit losses, business, and try to understand which company has a better growth chance. They will also try to understand the market, right? Like in Bangalore, for example, maybe people love eating momos. Okay. So a company which makes momos probably is more likely to grow than some other company. Or maybe Bangalore will become totally vegetarian, and vegetarian restaurants might grow faster than non-vegetarian restaurants, right? So this type of analysis, doing this analysis of thousands of companies, is a full-time job. So mutual fund is nothing where people, in a way, you are hiring a manager for you who will basically decide which company to invest in. Okay. Now the advantage of this is, there are multiple advantages of this. One advantage of mutual funds is that now you don't have to do a lot of lot of study of company, right? You have sort of hired somebody to do that for you, right? The second thing is, now you can start with a very small amount. Even if you have 50 rupees, you can actually get started, or 100 rupees if you have, you can get started, right? You are not planning to buy a full stock. You are giving it to a company which will manage it for you. Yeah, Shabri, go ahead, please.
Now, let me see if I understood it. So, mutual funds is hiring a manager for you who will decide which company to invest in.
Yeah.
Okay.
Exactly. Yeah. So he will invest in, and he will collect money from multiple people, right? So let's say if you are a mutual fund investor, I am a mutual fund investor, somebody else, and let's say all of us individually are putting 100 rupees, but all of us put together end up collecting, let's say, 1 crore rupee. Then now the mutual fund manager has 1 crore rupee to decide where to invest in. And the price of your mutual fund will increase as those stocks increase. Right?
Okay.
So as we talked about that mutual fund managers can invest in stocks, similarly, they can invest in bonds as well. Right? So mutual funds can be either stock-based mutual funds or bond-based mutual funds. So is this clear? Any other questions on mutual funds?
No, not for me.
Anybody else? Any other question on mutual funds?
No.
Okay. So now let's talk
So
about...
then what's the difference between a mutual fund and a hedge fund?
Hedge fund actually operates, hedging is a very different concept where you take sort of competing bets on two different types of stocks. So it's a very different kind of fund, okay, which takes bets. So if there are two different type of stocks that whose probability of going up and down is, so let's take a simple example. Let's say if a lot of people eat pizza, they'll probably fall ill and actually buy more medicines. So if people eat more pizza, what will happen is pizza stock will go up, but the medicine stock will also go up. But pizza is eaten less, then medicine stock will also go less, right? So hedging is basically a concept where you take bets in competing industry where one thing goes up, okay, so you will still make money basically, okay, you will not go down. So that is how hedge funds work. Okay, now let's talk about SIP. SIP is basically stands for Systematic Investment Plan. So what it does is, look, mutual funds enable you to do one thing very interesting, that you can basically do a systematic investment plan where what you can do is that you can decide that I will invest 1,000 rupees first day of every month, right? So this basically builds discipline for you over time. So mutual funds basically support a SIP. Most of the mutual funds will support a SIP. And this is the best way to build your habit and discipline. And you can automate this entire thing. Most of the tools, apps you'll see, what they'll do is that they will provide you a way that they can directly take money from your bank and deposit it in mutual fund. And then what happens is that every day you don't have to think about whether this investment will happen or not. This is something which will happen on its own. So it becomes one of the best ways to invest. So is the concept of SIP clear to everybody?
Yes.
Okay.
Yes.
Okay, so let's talk a little bit about some broad concepts which are useful for you. And some of these things will be useful for you right now, and some of these things will be useful for you as you get into a job. First thing is it's a good idea to understand what is an asset, what is a liability. Asset is something which enables you to, so for example, most of you are right now studying, right? And whatever you are acquiring is actually an asset, because that asset will enable you to earn more money in future, right? Your knowledge is basically an asset. Yeah, please go ahead with your question.
What does
I'm sorry, I didn't get you.
what does
I think your question is what is liability, right? Yeah, so asset is something which basically enables you to earn more wealth. Liability is something which takes money away from you. Okay. So for example, your education is your asset because that will enable you to get more money. But let's say you liability is something, let's say you take a loan. So loan, you will be paying a EMI per month. So that is something which takes money away from you. So it's a good idea to understand in your life what is the asset, what is the liability.
Can you
Right?
please repeat the definition of assets?
Yeah, so asset is something which puts money into your pocket. Liability is
Okay.
something which takes money out of your pocket.
So they're antonyms.
Yeah, that's the easiest definition to understand.
Okay.
Right? So just to give you an example, a loan can be a liability because you have to now pay monthly installments, right? But your education is an asset for you because this education will enable you to earn a lot of money, right, in the future. Right? Or let's say you have a house which you have given on rent, right? That is an asset because it is basically earning rent for you. But let's say if you are not able to put it on rent, then it becomes a liability. Right? The next topic let's understand is, it's a simple concept. It's an interesting concept called liquidity. Look, different type of assets have different liquidity. Liquidity basically means that can you convert it to cash or not? So let's say if I buy a house in some place, right? And the house is worth, let's say 20 lakh rupees. And suddenly there is some requirement, I need 1 lakh rupees. Now the problem with the house is that first of all, it is tough to sell. The second part is I cannot sell part of it. I cannot sell bathroom of the house and say, give me 1 lakh rupees, right? I have to sell the entire house, right? So whenever you make investment, it's a good idea to understand, is it possible for you to part sell it or not, right? Can you sell, let's say if you have a portfolio, if you are, let's say 10 lakh rupees, can you sell 5,000 out of that or not, right? And this is the important thing because house is a great example of that, right? If let's say you have a lot of houses, but if you are not able to sell when you need the money, it is useless for you, right? You might be a rich man, but let's say you need money to do some operation or some emergency and you can't sell it, then that money is useless for you, right?
Yes.
Now let's talk about this third concept, which is actually a very important concept to understand. Understand there is a concept of active income and passive income. So active income is what you are working for, right? So you go to office, let's say some of you become a doctor, you go to a hospital, you work there, and then you earn an income out of that. That is your active income. Passive income is where you are not actively working. So let's say you bought stocks from Sukhsagar, right? Now you are not working at Sukhsagar, you have just bought the stocks, and let's say that stock is making money for you, right? So that is passive income. You are not working hard towards that, but it keeps making money for you. So this is one very important concept for you to understand, that what we are taught as kids is how to make money, but we never teach our money to make money for us, right? So our money should not lie idle and make money, more money for us. That is what this is all about, right? So you should always create passive income because look, you can do only one type of work, right? If you are a doctor, most probably it will be very tough for you to run a restaurant or run a sugar mill, right? But you can focus on being a doctor, but you can invest in stocks of a sugar mill or invest in stocks of a restaurant and still make money via that business, right? So always understand that you have to generate enough passive income in your career so that that adds on to the money you are earning. Next one is very interesting one, credit cards. I'm sure you see a lot of adults around you using credit cards everywhere.
Yes.
Credit, right? And I'm guessing that some of you are not 18 are probably waiting when I'll get my credit card. So, but one thing you should understand is credit card is useful if you don't default on it. Otherwise, credit cards charge you huge amount of interest. Okay, it's like taking a loan and their interest rates are as high as 30%, 35%. So best option is either don't use credit cards. Even if you use them, always pay on time. Yeah, Shabri, go ahead, please. Shabri, you had a question?
Yes, sorry, I was talking on mute.
Yeah, no worries. Yeah, go ahead.
So what does use credit card with no defaults mean?
Yeah, so either don't take credit card, no defaults means that always pay on time. Okay, credit cards normally, let's say if I buy something on credit card today, I have to pay within normally 1.5 months. So if you use credit card, make sure that you make the payment, because if you don't make the payment in 1.5 months, then what will happen is you will be charged some 20-30% interest rate on that.
Payment for what?
Payment for credit card. So credit card, what happens is you, let's say I buy something on Amazon using credit card. Now, finally, all that amount, let's say I buy 5 times, all that amount will add together. And then I have to make payment to the credit card company, right? That amount.
Okay.
Right? That's how credit cards work. So make
Okay.
sure even if you use a credit card, don't default on the credit card.
Okay.
Tax planning is something probably too early for you guys to start, but understand how government taxes you, how you can plan the taxes. Tax planning is a separate topic, probably few hour session separately, but just think about it. That's something you have to learn at some point. Emergency fund is a very interesting concept. This is something which, in fact, as soon as a lot of you start your career, this is something you should build. It's always a good idea to have an emergency fund for any kind of emergencies, right? At least 6 months of your monthly expense. So for example, when COVID came, a lot of people lost their jobs, right? Now, if you lose your job and, you actually can suffer from that, right? So it's always a good idea to create an emergency fund, at least 6 times of your monthly expense, which is, parked somewhere for you, and it can be used for, any kind of, it might be a medical emergency, it might be financial emergency or something else which comes in, right? Next thing is make goals. Just like any other thing, it's important. Like, I don't know how many of you prepare timetables when you study, but make goals. Goals can be different things, right? Maybe you want to own a car, maybe you want to travel somewhere. So goals might be different for different people, right? So as you grow, your goals will be, and they evolve over time, right? When I was young, my goals were more, can I buy a car or maybe buy a home? Now, right now, it will be more around kids' education. Where will my daughter go to study? What will be her? But it's a good idea to keep a track of what your goals are, financial goals are. And all these goals, when you make sure that you mention the amount you might need and in how many years do you need. So let's say if I have to pay for my daughter's education, that is amount. My daughter is right now probably around 20. She will probably need it in 4 years. And that amount might be 10 lakhs, right? So put that number to it, put that duration to it. Make a savings plan whenever, as soon as you start earning, you have your first job. Don't get started on all the list of what you have to buy. I think all of you have a wish list you want to buy, but I think it's a good idea for you to put a savings plan also in mind. Right?
Okay.
Shabri, you had a question?
Oh, I forgot to then raise my hand again.
Okay, okay. No worries. Get rid of debt. Yeah, this is more like, I think this happens later in the
Debt is the same as loan,
loan.
right?
It's the same. Yeah, it's a loan. Get rid of loans. Don't get into loans.
Okay.
Another thing is track your net worth. This is again something you can start whenever you start earning. Always keep a track of how much money you have. Okay. And you can create a very simple Excel, like I'll show you maybe here. You can create a very simple Excel here, which basically is something like this. You know, this is like a date, and here you mention which kind of product is this, right? And then you create a how much, what is your asset, what is your value of your assets.
What does funds mean? Debt funds?
These mutual funds, these are funds which are investing in bonds.
Okay.
Okay. So make a simple Excel like this where you put a date here and then you put columns that this much I own, amount I own, and then you can just draw a graph here. So just start this type of Excel early in your life and you can sort of track. Look, anything which you track effectively is you are going to do better at it, right? Right. So let's get back to here. Yeah, next one is savings account is a scam. Yeah, so let's say you at your homes you use something called as refined oil, right? So what happens is, let's say if refined oil was called as chemically treated oil, do you think you will actually eat it at your home? Probably not, right? That doesn't sound like a good name for a refined oil, right? Yeah, but that is what it is actually. It is actually chemically treated oil, right? So what happens is in a lot of places, different products are named interestingly so that consumers get confused. Savings account is exactly the same. Savings account is something you should use just for your day-to-day transaction. It is not a place where you store a lot of money, right? You store a little bit of money so that let's say tomorrow you have your debit card which you want to swipe. You should invest most of your money and use savings account just to maybe receive your salaries or whatever money you get, and then you immediately invest that, right? You should not keep a lot of money in savings account, because savings account will give you a interest rate which is much lesser than inflation. You are becoming poorer by keeping your money in. So currently a savings bank account will give you 2.5% interest rate, and inflation is around 5.5. So you can clearly understand that you are becoming poorer day by day if you are in savings account. LIC is a bigger scam. I mentioned more about LIC because I think a lot of people end up buying the wrong LIC policies. So again, I showed you the XIRR calculation. Any policy, insurance, or any other product you buy, just calculate. Don't get confused by people telling you that you get your money back after so much time. Don't confuse with that. Calculate XIRR. Ask them what is the XIRR of this product. So most of the LIC policies will give you 4 to 7% XIRR, which is too low for you to invest in. Yeah, Sabri.
Is scam the same as a fraud?
No, it's not exactly a fraud. I think I'm using the scam word to emphasize on that.
Okay.
So it's not exactly a fraud, but it's a bad product to buy.
Okay.
Okay. No, both of these things are not fraud. They are very, very legal things to do. Okay.
Yeah, okay.
But might not be good for you from growing your wealth perspective.
Okay.
Now, one thing we need to figure out how much to save, right? This is a question which is tough for us to get an answer to, right? So this is one overall framework you can use. 50% of your money should go on your needs. Needs are like rent you are paying or food, those kind of things. 30% of your money goes into wants. Wants are probably some expensive clothes you want to buy, or you want to dine in a costly restaurant. That is all 30% on wants. And at least 20% you should save. You should start your career with at least 20% saving. And my hope is that as your salaries increase, probably this number will increase as well. but this is the overall framework to figure out how much you should save. And whenever you start earning, make sure that you keep 20% out, and assume that if your salary is 100 rupees, assume that your salary is 80 rupees. Okay, 20 rupees is you are investing in your future.
So 20% is basically we're saving it for the future.
Exactly. So you are saving it for the future, so that in future you
So,
can.
so from which part of this does the emergency fund go to? Saving, wants, or needs?
Yeah. So look, emergency fund is part of the saving. Okay.
Okay.
Emergency fund, what you can do is that initially you can build emergency fund. So what you can do is, let's say you start your career. Let's say your monthly expense is 10,000 rupees. So if you have 60, 70,000 rupees in emergency, that is good enough for you. Right. So now what you do is, initially, whatever your saving is, you put it in your emergency fund, and then you start investing in other things. Right. This is more at an income. When you are earning, at least make sure that 20% of the money you save. These are different types of asset classes in which you can invest. Real estate is there. Real estate is there. Liquid assets, as I was saying, that real estate type of things are very illiquid. You can't sell part of the house, right? Then liquid assets are stocks, mutual funds, fixed deposits, digital gold. Gold, you know that you can buy digitally, right? You don't have to buy physical gold. You can buy digital gold. REIT and InvIT are slightly, these are different ways to invest in real estate without buying real estate directly. Yeah, Angel, go ahead.
Hi, so actually I wanted to ask, you said that saving account is a scam. I have heard people saying that we should invest in the saving account and soon our money would be saved and we could use it in the future.
Right. So what I'm saying is, saving accounts will give you very low returns, less than the inflation. So if you keep a lot of money in the savings account, your money will keep reducing in value. So keep your savings account to a small amount and invest your money in better assets, which will give you a higher return.
So then, except saving account, where should we invest? An example?
Yeah, so I'll come to that. I'll come to that, Angel.
Okay, so thank you.
Okay. Yeah, go ahead.
No, sir, just like instead of putting it in a savings account, you can put it in, after you get a load of money, you can buy real estate, and real estate gives good returns because renting and all, right?
Yeah, but the only problem with real estate is that it is an illiquid asset, right? It's very tough to sell real estate.
Yeah.
So there is an indirect way now to invest in real estate, is something called as REIT. Okay, Real Estate Investment Trust. So what this does is, this does sort of mutual fund of real estate. Okay, this is a new instrument which is now starting up in India. It has been there in other markets. So what it does is, it creates a company which will invest in a lot of properties, and then whatever money it makes out of rent, it will distribute as dividend to the owners of that. Okay, just think of a mutual fund which invests, instead of investing in bonds or stocks, it invests in real estate. Okay. And then there are obviously asset classes like Bitcoin, Ethereum. My suggestion would be to stay away from them, but why you should stay away is a very different and long discussion, a separate discussion. But yeah, these digital assets are not regulated by the government, so very tough to very tough to make them work. Okay, so these are the kind of goals we were talking about, type of goals you can have. These are more goals when you probably grow up. But yeah, just make a list of goals like this. What is the amount you need and how many years you need? And another thing which you should add here, which I think I have forgot to add here, is that there are flexible goals, then there are inflexible goals. So let's say I want to travel to Europe, right? That's a more of a flexible goal, right? I want to travel in 5 years, but if it becomes 7, I don't mind it. But let's say my daughter wants to go for a college. That is an inflexible goal. I can't tell my daughter that you can't go to college or go to college 2 years later because I don't have money, right? So there are So always put that when you are planning your goals, always put that. I think I'll skip this part. Yeah, or let me just go through this. Yeah. So there is one way. So as we were talking, right, that stocks are relatively a riskier asset. Debt or bond fixed deposit is a more predictable asset, right? So what happens is that there is a age-based formula. So you can understand, right, that bonds will give you very relatively defined results. They won't go up and down a lot, but stocks will go up and down, right? So if you look at the 30-year market, uh, stock will go something like this in a very wavered manner. But what will happen is that your so stock market will go something like this, right? In some manner like this. But a bond will roughly go a straight line, right? A bond price will go roughly straight line. So now what happens with this is that usually people are fine with these up and down early in their life, but later on they want to be stable. So what you normally do is that when you are younger, you invest more in equity. And as you get older and older, you basically reduce your equity and invest more in bonds. Okay. So one of the common formula is you using 100 minus age. So if you are a 25-year-old, 100 minus 25 is 75. So I'll invest 75 in equity, 25% in debt or bonds. And when I'm 40-year-old, this ratio becomes 60-40. So this is one common sort of thumb rule to follow. You can obviously, based on your knowledge and your interest, you can change from here as well. Yeah, Shabri, tell me.
Can you please tell it once again how you calculated it?
Yeah, so let's say it is 100 minus. So let's say you're 25-year-old. So 100 minus 25 is 75. So you put 75% in equity and 25% in debt or bonds.
Okay.
Okay. Now and what you do is as you keep aging, let's say now you are 40-year-old. Now what you do is 100 minus 40 is 60. So 60% is equity. So as you keep growing, right, what you do is you keep reducing. I think somebody is asking me, will I be recording will be shared? Yeah, I'll share. Yeah. Okay. So as you keep growing, what you do is you keep increasing the debt part and reducing the equity part, so that a graph like that which goes ups and down can give you much more problem when you are at an older age, right? At an older age, and you are not probably earning a lot at that point. You are probably retired, right?
Okay. So equity they usually give of a company.
Yeah, equity is stocks.
Okay, and debts would be the loan. So
No.
even if your company is not working, you'll still have some money so you can pay the debt.
Yeah, that's right. Yeah. So based on what your priorities are, you can actually, so these are different different types of stocks or things you can buy. So one is domestic equities, domestic stocks, which is Indian companies. International stocks, you can buy international stocks sitting in India. You can buy a Facebook stock or a Google stock. And then debt is obviously the loan based products, and then gold. And here gold, I am referring to more of digital gold, not the physical gold you buy. So based on how aggressive investor you are, these ratios might change for you. So what you do is when you build your investment, you build ratio of these. In what ratio do you invest in each one of them? So this is just some thumb rule or thumb guidelines. These things might differ from person to person, but this is, you need to think through what is the right ratio for you. Shavri, you have a question?
No, I just unraised.
Okay. I think somebody else. Angel, you have raised a question.
Yes, so can you just explain me the meaning of digital gold?
Yeah, so digital gold actually, what happens is there are different type of digital gold. So one simple format is, look, normally when you buy gold, you get gold to your home and you keep it, right? Either it's a jewelry or, right? So one is buying jewelry, right? Look, jewelry, the problem is that there is a lot of making cost associated with it, right? So that is not a investment. That is something which you are consuming in a way. So maybe 10-15% of the gold value goes away in the making charges, right? Second thing is you can buy a biscuit, right? You buy a gold biscuit. There are nowadays you can buy 10-gram biscuit, 1-gram biscuit. All those things are available. But the problem is you still have to store it. You still have to keep it with you. It can get stolen and all those things are there, right? Now the third option for you is there are companies which store it on your behalf. So you buy it. What the company will do is it will buy it and it will store it. You don't have any storage cost associated with it, but your price will increase as the gold prices increase. So in 2000, if you bought a gold biscuit of 10 gram, which will cost you 4,400 rupees, right now that 4,400 rupees would have become 50,000 rupees, and you can sell it for 50,000 rupees, right? Now, so this is how you can buy gold, and this digital gold is possible in the sense that you can go on a website and buy that gold. They will store on your behalf and give you a certificate that you have bought this gold. And you can buy in any amount. You can say 100 rupees, 200 rupees, 500 rupees, right? But the best way to buy gold is actually there is a government scheme called sovereign gold bond. Okay. And if you buy that, what government does is that government gives you appreciation based on gold price, plus government gives you extra 2.5% interest. Okay. So there is a scheme by government called sovereign gold bond, and that you can buy from any bank or you can buy in a demat account very easily. So that is the best way to buy gold.
Okay, sir.
Government gives you some, look, investment in gold means if you forget sovereign gold bond is actually a very bad idea this is one of the problems of Indian economy. Look, India owns a lot of gold, right? Every family has a lot of gold, which is lying in some locker or lying in your mother's almirah or something like that, right?
True, sir.
Now, that gold is actually a non-productive wealth, right? Let's say if you bought a stock, that money is being used to create jobs, is being used. Let's say Sukh Sagar starts another branch that will make a few more jobs, that will grow the economy, but gold just sits idle, right? So that is one of the problem of Indian economy, that we have too much gold in our households.
Yes, sir.
Okay. So if you want to invest in gold, use sovereign gold bond, and government is trying to solve that problem. They are giving you the returns you will have on gold, but your money becomes productive.
Okay, sir.
Right. So this investment style is just trying to understand your what is your risk taking capability. Look, everybody has a different risk taking capability, and there are two parts of it. One part of it is, let's say you are worth 1,000 rupees. Maybe losing 1 rupee might not be a big deal for you. But let's say you are worth 10 rupees, then losing 1 rupee is something significant for you. And then there is another aspect of risk taking. That is just in the mind, right? There are some people, even if they are worth 1,000,000 rupees, they lose their night sleep for losing 100 rupees, right? So if you are that kind of person, then you have to be conservative. You can't invest in a style which goes up and down a lot, right? So that is a personal part of personal finance, that you have to understand yourself, which category do you lie in, and plan based on that. So other thing which I think I was explaining earlier as well is, so this is a very easy way to calculate. As Einstein has said, compounding is magic. It's magical. So this is something which explains you this. I think some people had questions about savings bank. So there's a magic number 72. What you do is that, let's say if somebody is offering you 3% interest, you just divide it by 3. Okay. So 72 divided by 3 gives you 24. So your money will double in 24 years. Okay. This is an easy way to calculate time to double. Okay. You can use this formula very easily. Yeah, Sabri.
What is MF and FT?
What is what? I'm sorry, I didn't get you.
What is MF and FT? Is
Oh,
MF mutual fund?
Mutual fund, yeah. Mutual fund and fixed deposit, yeah.
Okay.
Okay. So savings account typically gives you 3%. So your money will double in 24 years. Fixed deposit give you 6%. Actually, now they give you lesser than 6%. So I made this PPT few last year actually. So your money will double in 12 years. Mutual funds can give you 15%. Your money will double in 5 years. So from this table, it's very easy to understand that if you had invested something in mutual fund versus savings account, you will have a 20-year delta in doubling your money. Right? Yeah, Sabri, go ahead.
Can you please repeat that the thing you were saying just now? I couldn't understand.
Yeah, so there is a magic number called 72. Look, you can do the maths and calculate how much time it will take to double your money. But just use this magic number 72. So if if there is anything which is giving you 3% return. Okay, this is the percentage of return, right? So you divide 72 by 3. 72 by 3 is 24. So this will give you 24 years to double. This is just an easy way, shortcut to calculate this.
So what are these numbers 15, 6, and 3?
These are the percentage returns given typically by these things. So mutual funds will typically give you 15% returns.
Okay.
Okay, means if I look at past history of 15, 20 years, mutual funds have given roughly 15% returns. Fixed deposit will give you roughly 6 years.
Okay.
And now here you can see that for you to double your money, savings bank account, if you put 100 rupees and you want to see it as 200, in savings bank account, you'll take 24 years. In mutual fund, you'll probably take 4 or 5 years, right?
Okay.
So you will have to wait at least 20 years extra for the same.
Okay.
Right. So this illustrates the importance of how you can grow your money very fast.
Okay.
So let's look at some of these calculators. Look, one thing which is a good thing to understand is that how much money can I really make if I invest this at if I invest well. Okay. So let's take, there are these calculators which are available. Let's say you start investing 1,000 rupees. Okay. These are simple calculators. And let's say every year you grow it by 10%. So first year you invest 1,000, then you make it 1,100. Second year you make it 1,100. Third year you make it again 10%. And let's assume that you get 12% returns and you do this for next 40 years. Okay, a lot of you are much younger, right? 40 years later, you will probably be in your 50s, right? So how much money will you make with this? Okay. So this is the amount of money which will become just 1,000 rupees you are starting with. Your total corpus value will be 3.18 crores. Amount you would have invested is only 53 lakhs. Okay. And the amount you would have earned is 2.65 crore on this.
So these things that we invest them in the bank?
No, so here 12% returns banks will never give you, right? So assuming that you invest in mutual funds, and here I'm assuming slightly lesser return. Look, if I make it 15% here, okay, this becomes almost 6 crores.
No, I'm asking that the monthly investment amount. So where do we invest?
Yeah, so I'll just come to that actually, where you can invest.
Okay.
Okay. Look, my goal at the end of it is to get you started on this journey. Okay.
Okay.
But what you can understand from here is that this amounts can become very huge over time if you are disciplined, right? So even starting with as small as 1,000 rupees, okay, you can, and most of you I'm sure can, you will start your careers at significantly higher salaries. Let's say you start your careers at 30,000 rupees, right? 30,000, 40,000, it's not very uncommon, right? Let's say you save 20% of that. Let's say you save 5,000 rupees. Okay. And you do this over next 40 years, and 5,000 probably might not be too much of money for you to. You will probably end up building a corpus of almost 16 crores, right? So all I'm trying to point out is that these amounts can become significant if you are consistent at it. Now let's talk about, I think this is what I think Angel also you were talking about, and Ashabri you were also talking about, that what do I do if I am a teenager and I have rupees 100? And in fact, my suggestion would be you should ask your parents for that rupees 100, right? So there are simple ways to invest. First thing is you should invest only in mutual funds, not directly in stocks, because as I was telling, understanding stocks in detail, all that is a full-time job. Right now, you might want to focus on your studies and other things you are doing instead of spending so much time in understanding every stock. Yeah, Shabri, go ahead.
So what's the minimum age of investing? Is that we can invest in any age?
Yeah, you can invest at any age. That is not a problem. It's just that what happens is that if you are below 18, it will be a minor account. Then there is a process to convert it to a major account. Okay.
Okay, what's a minor and major account?
Below 18, you will be considered as a minor. Okay. Once you become across 18, you are an adult, and then you can, so the same account will get converted. Right.
So okay.
But you can open an account right away. Means I'm guessing you will be 12, 13 or whatever, right?
No, I'm 10.
You're 10. That's nice to see. Okay. So yeah, but you can actually create an account right away. And you'll have to mention your guardians as your parents, something like that. And then what you can do is that once you cross 18, that account will become an independent account.
Okay.
Okay. So if right now you have rupees 100, although I talked about investing in gold and debt, all that stuff, for people like you who are much younger, I always suggest that don't get into debt and all other things at this point. Maybe that is something you should do when you start earning your first salary. But right now what you can do is just invest in these, divide 100 rupees in two parts of 50 rupees each. Invest 50 rupees in Parag Parikh Flexi Cap. This is a mutual fund, specific mutual fund. This in turn invests in companies. Flexi Cap means this involves very large companies. This involves medium-sized companies and smaller companies as well. Plus it invests around 25-30% of its money in US stocks. So it has Google, it has Facebook. So this gives you exposure to a very large number of stocks just by buying one mutual fund. Okay. And not just in India, it's outside India as well. Right. So what I would suggest you is buy 50 rupees, put 50 rupees in. In fact, this is the combo which I use at least for my daughter as well. And the other 50 rupees, you basically invest in an index fund. Navi is a new company which has recently launched a lot of index funds. And so there's a Nifty 50 index fund. What it means is that they will invest in the same ratio as Nifty 50, what I explained to you. So you will get exactly the same returns how Nifty 50 moves. Okay. So this is the best way to build your Angel. Does that answer your question?
Yes, sir, completely. So, but I have another doubt.
Yeah,
What is the minimum amount from which we should start? I am 15 currently and would be in 10th standard. So
Right.
what should be the minimum amount if I'm starting my mutual fund from tomorrow?
Yeah, whatever you can convince your parents on. But there's no minimum amount. You can start with 100 rupees, 500 rupees, any amount.
Okay, sir.
Right. So there is no minimum amount from mutual fund side. Is there is, means you probably 100 or 500, probably that will be the minimum. But yeah, means try to get, means whatever birthday gifts you get or whatever other things, other money, you get pocket money. Look, it's all about building habit, Angel, right? If you build that habit from right now, this will become part of your life. It will become like brushing your teeth or whatever, anything else which you do on a daily basis, right, Angel?
Okay, sir. Okay, sir.
This is a simple portfolio. It does not have too much complications. You know, I explained you a lot of concepts, but it's good idea to keep your portfolio very simple because you are studying math, physics, calculus, algebra, or God knows what, right? All those subjects. and they'll eat up enough of your brain time right now. And they are important for you to study as well, right? So my suggestion would be use mutual funds, divide into two parts, use one flexi cap fund. The one I recommend includes foreign equity as well. It has Google, it has Facebook, and I think Tesla, maybe Tesla, I don't know, I'm not sure. So this is the simplest way for you to get started.
So what about investing in like one company like Tesla, Google, Facebook,
Yeah, so
Cisco?
you can start, you can invest in them directly as well, but the easier way is to do via mutual funds,
Okay, sir.
right? Because if you invest directly, what happens is that you have to track them, right? Right. So Tesla, for
Yes.
example, has been falling in its value for last, I think maybe 8-10 months, right? Now, for you to track all that, what is happening in the company, understand company news, understand company reports, all that is a fairly complicated task, right?
Yes.
Companies have quarterly results and they publish those results, reading those balance sheets, all that is a fairly complicated. Here, what you are doing is that you are giving that job to somebody else who is dedicated at doing it, right?
Okay, sir.
So this is an easy way to build a simple portfolio. Don't go to gold, don't go to debt. You guys are much younger. Just do this kind of investment and you will have decent value built by the time. Look, India is a country which is growing at a fast pace, right? This same thing approach might not work 100 years on the line if developed economies are flattening out, right? But we are at a place where we are growing at a fast pace as a country, right? So yeah, so I think what next is simple. Open a mutual fund account. Don't go to a demat or stocks account right now. Read up more. You can obviously find a lot of stuff on internet. So these are important things. Save money, start saving money right away. You don't have to wait to become an adult or anything like that. Read up more. There are enough YouTube. There is enough stuff on internet. Don't fall into look. This is something which happens a lot in our families. Is somebody in the family will end up selling you a bad product, right? So not falling for, if somebody comes and says buy this LIC policy, tell them, okay, I'll calculate XIRR. Tell me what is the XIRR. And if that XIRR is below inflation or roughly at inflation, you know it's a bad product, right? You're not going to make money out of it, right? So it's a good idea to understand your whatever, like just the way you buy a phone, right? If you buy a phone, you look at how much RAM it has, what is the processor. Similar analysis we have to do when we are trying to buy a financial product, right? It's exactly the same. The only problem is financial products, it's easy to confuse you, right? When you buy a phone, I'm sure most of you would have bought a phone where you would have read up maybe 20 websites to understand what that phone does and what it doesn't, right? But financial products can be missold to you very easily. So it's a good idea to, that's why I explained XIRR was a complicated concept, but play around with it in Excel and you'll realize that it's magic. You have to understand it whenever you buy something. And the most important part, I think this guy is actually he's a economist from he's a psychologist and economist from Israel, or rather US and Israel. So yeah, money does not buy you happiness, that's true, but lack of money certainly will cause you misery. Okay, so it's a good idea for all of you to build your investment plan, save a lot of money, right? And build a sufficient amount of wealth as you go along. And then you can decide how you look. Everybody has different meaning of money, right? Some person wants to, maybe some of you want to drive across Europe. That's you want to do backpacking in Europe. That might be your goal. Somebody else might to probably set up a music school. Somebody else wants to just buy costly phones. That's fine. That's okay. So everybody is made different and all of us might have different financial goals. But good thing to understand is that money may or may not buy you happiness, but lack of money is certainly going to be a problem. So that's it, what I had in my content. But if there is any more question, I'll be more than happy to answer.
Yeah, I
Yeah,
loved it, sir. I understood everything and all.
okay. So, but I'm really glad to see that a lot of you much younger are trying to learn this. Okay, because a lot of us learned this in our 40s. Okay, and it was too late. Okay, for us to learn, right? So a lot of us have learned this by doing mistakes, and I obviously want that none of you do that kind of mistake in your careers. And feel free to reach out to me. I'm there on almost all social mediums you guys use, from Snapchat to Insta to Facebook to Twitter to whatever medium works for you guys. Feel free to reach out on any of the mediums. Any other questions anybody else has, I'll be happy to answer. Ashavri, you have a question? I see a raised hand by you.
Yeah, so it's not really related to this topic, but I just wanted to ask that in the starting of this webinar, you said that you've done IIT, right?
Yeah.
So I just wanted to ask that what was your experience while doing that?
IIT was a great place to study. Means it was in those days, IIT Kanpur was the top IIT. Only the toppers in JEE used to go to IIT Kanpur. And I think the best part of being in IIT was that all my other, classmates were sort of best in the country or best in the world. And so with them, I was more into cultural things in college. So I didn't study much, frankly, in college. But IIT was a great place to study. IIT Kanpur in those days used to be obviously the top IIT. Now, obviously, that has been taken over by IIT Delhi and Mumbai. But it's a great place to study. Means certainly a great place to study. But one thing which I have realized now is, after working in the industry, that in those days the difference between IITs and other colleges was very huge. But in the recent past, I work with smart people from, I have my own companies. I work in the area of artificial intelligence. So I come across smart people from all over the schools, and Bangalore actually has one of the best quality of schools. So a lot of other colleges also have very bright students. But yeah, IIT is a great place to study. You should try to get there, work hard.
Yeah, I'm trying to. My mother did do the test, but she's really good at math, but the only question she couldn't do was a concept, and I forgot the name.
Yeah, sure. Ping me separately. We can have a separate discussion also on this, Ashabri.
Okay.
Right? Happy to help in any way. Yeah, it is a great place to study. Yeah, and yeah, it's more your colleagues and network you get from there. That's always very good.
Share available on our social media website.
Yeah, you can actually. I don't know what you use. Insta, Twitter, anything will work for me. Just search for my Balkrishna Birla. Yeah, just search for that. You'll get.
Okay.
Any other questions, folks? Okay, so we have had almost more than 2 hours. That was good. I think nice to see that you kids could.
I learned a lot of new terms.
By the way, it was nice to see a lot of you, Ashabri, and all of you asking a lot of questions. So please feel free to reach out to me, and we can have one-on-one sessions as well if you need any clarifications. Okay.
I think I need your help in IIT.
Sure, please ping me, Ashabri. Happy to talk to you anytime. Okay. Okay, thanks guys. Thanks a lot, everybody.
Thank you, sir.
Thank you. Bye-bye.
Bye.